A denied health insurance claim is not the end of the story. Federal rules give you up to 180 days to file an internal appeal, and winning can mean the insurer pays back hundreds or even thousands of dollars, according to healthcare.gov and CMS. Most people never open that door because they read the denial letter as a final bill. I read the fine print so you don't have to. And by the end of this, you'll know exactly how to overturn a denial that shouldn't have happened. Under the Affordable Care Act's patient protection rules, you generally get up to 180 days from when you learn of a denial to file an internal appeal, according to healthcare.gov and CMS. If that appeal fails, you typically have 4 months from the final internal denial to request an independent external review through your state insurance department. Here's what makes this so costly. The 180-day internal deadline and the 4-month external review window are hard cutoffs, and if you miss them, the insurer can treat the denial as final, according to healthcare.gov and NAIC. A single outpatient procedure or imaging study can run anywhere from $500 to $5,000 or more, so one missed deadline can lock in that entire bill as personal debt. Your first move is to pull out the denial letter and explanation of benefits and find the section labeled Appeal Rights. Federal rules require insurers to include your deadline right there. According to healthcare.gov, write the internal appeal deadline and, if relevant, the external review deadline on your calendar with a 7-day buffer, then call the number on your insurance card to confirm the dates and log the representative's name, time, and any reference number. Your second move is to nail down exactly why the claim was denied, because insurers are required to give a specific reason and tell you how to appeal, according to healthcare.gov and NAIC. Log into your member portal, download the EOB and denial letter, and find the denial code. Often something like not medically necessary, because your entire appeal has to answer that specific reason, not just argue the decision feels unfair. Your third move is to build an evidence packet before you write a single word of your letter, because NAIC and WebMD stress that you have to prove the insurer made a mistake, not just say the decision is unfair. Ask your provider's records department for a letter of medical necessity explaining why the care is essential. Gather your test results and visit notes, and pull the policy language from your summary of benefits, showing the service is actually covered. You do not need to write a legal brief. WebMD advises giving the insurer 2 very well-written paragraphs plus your supporting documentation. The letter's job is to connect 3 things: the denial reason, the exact policy language showing coverage, and the medical evidence proving necessity, all in one tight reference package. Your fourth move is to write the letter and actually file it through the channel your denial notice specifies: portal upload, certified mail, or fax. At the top, put your name, policy or ID number, and claim number. Then in 2 clear paragraphs, state that you're appealing. Cite the specific denial reason. Explain why you disagree using your policy language and medical facts, and point to your attached evidence, following the format NAIC and WebMD layout. If this is useful, subscribe. The next breakdown is already coming. Before I get to the most counterintuitive part, the piece almost nobody uses, your fifth move is to protect your paper trail. Record the exact submission date, keep a complete copy of your letter and every attachment, and set a 30-day follow-up reminder to call if you haven't heard back, because that documentation becomes your leverage if you have to escalate. Here's the counterintuitive part most people miss. Even if your internal appeal is denied, you get a second bite. You typically have 4 months from that final denial to request an external review by an independent third party through your state insurance department, and that reviewer can overturn the insurer and force them to pay, according to healthcare.gov and NAICC. Let's make this concrete with a $3,000 outpatient procedure denial. If the appeal succeeds, you're back to your plan's normal cost sharing. For example, a 20% coinsurance share would be about $600, meaning you'd keep roughly $2,400 on that single claim. The coinsurance rate is illustrative, but the mechanism that the insurer pays when an appeal wins is documented by healthcare.gov and NAIC. Over a 20-year career, A few of these avoidable losses can quietly add up to around $10,000 or more. One thing to know for emergencies: if a delay in care could be life-threatening, you can request an expedited appeal, which is often decided within 72 hours, according to NEIC and healthcare.gov. The exact timeline can vary by plan and state, so check your current plan materials, but do not sit on an urgent denial waiting for the standard process. The most common and most expensive mistake is treating the denial letter like a verdict, shoving it in a drawer to deal with later, which is exactly how people burn through their 180 days without realizing it. Under federal rules, every denial on a non-grandfathered plan comes with appeal rights, according to healthcare.gov. So the moment you get one, the clock is already running, and reading it late costs you real days you can't get back. The second big mistake is sending a weak, undocumented appeal that just says the decision feels unfair. Insurers dismiss those easily, according to NAIC and WebMD. A winning appeal ties the denial code to your policy's covered service language and attaches a physician's letter of medical necessity, plus your records, so you're proving a mistake rather than just complaining about one. Let's run the playbook back fast so you can act today. Lock in your deadlines with a buffer, pull the exact denial reason, build a medical necessity packet with your doctor's letter, submit a tight 2-paragraph appeal citing policy and evidence, and log everything with a 30-day follow-up. And if the internal appeal fails, use your 4-month external review window for a second shot. Remember, a denial letter is an opening offer, not a final bill. And now you have the playbook to challenge it before the clock runs out. Next, I'm covering how to read your explanation of benefits line by line to catch billing errors that cost you money before a claim is ever denied. If you want to catch that, subscribe so you don't miss it.